For now, it's very, very quiet. Yes, there's a green tick, but it's not very convincing.
Benchmark indices are down, but mildly, just down close to about 0.1%.
The weakness continues. We are down 63 points on the Nifty at that 17,329 mark.
Selling pressures just picked up, right? It dipped and now it's recovered. So back above 17,300, and that was yesterday's low.
84, 85 points lower on the index is what we will end in terms of a cut with. So, you know, the market broke below yesterday's low. We'll end under the 200-day moving average.
Hello and welcome to CNBC-TV18. You're watching us here on Markets Today. This is the show where we track about 6 hours of day's trading action in 5 headlines. Let's talk about all those 5 headlines today. Sensex and the Nifty slide for the 8th straight day as selling pressure continues. Investor wealth to the tune of 25 lakh crore rupees has been wiped out in this year so far. This is the biggest ever drop in market cap in the first 2 months of a year. The Nifty closer to that 17,300 mark. The Nifty Bank too also ended mildly lower. Shares of Vedanta declined for the 8th session as well as dollar bonds lose value and debt concerns mount. Vedanta spokesperson says there is no question of default, claims the company is in a comfortable position to meet its April and first quarter maturities. Zee Entertainment's re-entry on the F&O list pushes the stock 6% ahead. Also, the street cheers Citi's decision to move forward on debt resolution. Cipla slides 4%. Following US FDA's 8 observations on its Pithampur facility, markets fear that this is likely to delay the launch of its key respiratory drug, Advair. Adani Group stocks regain some lost ground. Market capitalization rises by 30,000 crore rupees, making it the best day in the last 3 weeks. Let's tell you what we have in store for you. It's a packed show today in Market Opinion. We have Ajay Srivastav, who is the CEO at Dimensions Corporate Finance Services. Also in Corporate Prices, we do have Sanjay Kumar, who's the CMD of RailTel Corporation of India. The stock did well after positive commentary coming in from him. We'll come to all of that and more in just a bit. But first up to the markets, which closed in the red for the 8th straight session. Investor wealth to the tune of 25 lakh crore rupees has been wiped out in this calendar year so far, which makes it the biggest ever drop in market cap for the first 2 months of the year. Prashant Nair gets us more.
Another down day for the markets, and 8 days in a row, the market has ended in the red. There's got to be some record of sorts. And, you know, yesterday's low went. One was hoping that would hold, but we made a new low today. There were attempts at a bounce, especially in the last hour and a half or so, but they were mostly sold into. Like yesterday, banks did well. I mean, the bank index was up 1% yesterday. It was in the red, but a vast improvement over what the Nifty was able to do. And the other silver lining was the broader markets. Mid-cap and small-cap indices ended about 0.5% and 0.75% in the green. And I'll get to stocks there in a bit from now. Now, the Adani pack had a bit of a reversal on the upside, and that's important to mention because they've been falling like 9 pins for some time now. So Adani Enterprises, Adani Ports, Adani Wilmar, Adani Green, Adani Power were the top gainers in that basket. There were losers there as well, which we can talk about later. But I mean, there was more up than down, and it's not been that way for some time now. In the broader market, I think there were lots of gainers, and I'll stick with that. So Zee was a big gainer, big reversal from yesterday's loss. Triveni Turbine went up sharply. Escorts bounced off an important trend line we highlighted in the morning. JSW Energy, Uflex, Bank of India, Phoenix Mills, LG Equipment, Berger Paints, Vedanta, Lal Pathlabs, and so many others. And I'm only highlighting things which went up with solid volumes, so you can imagine the list was longer. Broader losses coming through in news-related names. So Vedanta saw a sharp cut, and we've been highlighting reasons why. Paytm lost quite a bit. Cipla was under pressure. Tata Elxsi and APL Apollo were some of the others which came under pressure. As I said, the Nifty broke yesterday's low. The fresh low today was 17,255 on the Nifty. It's also closed below the 200-day moving average, which I think is important to note. From a global arena, equity stability is important, but I think what markets will also watch is cap on gains as far as the dollar index is concerned. It fell from the 105 plus levels to 104.6, and I think if it remains here or drifts lower, that should provide some catalyst for perhaps a bit of a bounce after so many days of continuous fall. Back to you.
All right, Prashant, thanks a lot for that. So that's about the markets. Let's get in some market opinion as well. Ajay Srivastav, the CEO at Dimensions Corporate Financial Services, said that the market looks healthy and is seeing correction in the right place as well. It's down for 8 days 8 straight days. Let's see where it stops. Take a look.
The market is expensive. Still, a lot of stock continue to be very expensive. And I think you are seeing a normalization of PEs in many stocks, good quality stocks, no doubt about it. So that normalization is happening. Movement of incremental money flows are slowing down as people move to fixed income, realizing that, it's equity is a both ways game. You can go up and down. So, all in all, I think it's a very healthy market and it's correcting in the right places. It's going in accordance with the government economic policy. You don't see any correction in the capital goods stock. If you look at it at all in the last 7 days, which is the way the market should move to. So I think, all in all, when you say froth is out, I think perhaps I would say optimism is down. The banking stocks are overbought in India for a long time. And that is one of the reasons why they've underdelivered is everybody hoards them, right? Everybody's got stock of ICICI, HDFC, every mutual fund scheme has it, every multi-cap has it, main cap has it. So, so look at the amount of buying and stock holding of the Indian institutions in the bank. FIs, that's the number one holding. And the fact remains that at the end of the day, they're good quality stocks, but they cannot give you superlative returns. Simple fact, one of the most competitive industries in the country is banking at this point of time. RBI may shield it as much as it wants, but I think the moment the yield factor became a little bit positive, I think the problem with the bank started. And look at where they're growing, retail loans. Any economy in the world will tell you, and the story of banking has always been, when the economy slows down, retail loans get into a problem.
Right, let's get you some more market opinion coming in from Vikash Kumar Jain of CLSA. He said that some bank stocks are actually looking good from a valuation viewpoint, and that ties in with the kind of recovery that we saw in the Nifty bank and the fact that that recovery sustained in today's trading session as well. Let's hear him out.
The market is lighter for sure, but it's not really in what can be traditionally called at an extreme bearish point, which leads to a contra move. So yes, it's a lighter market, but it's not really at that point of time where I can thumb the table and say that everyone is too bearish and maybe we could have a contra move. Not yet. On a valuation basis, some of the banks are looking good. India is simply catching up to, or there is some kind of a reversion to the outperformance we've seen over the last 2, 3, 4 years. And, this is versus China or versus the EM markets in general. And since flows could reverse in a situation where India is no more the darling market, any big move for this large sector would clearly depend on flows.
Let's talk about another stock which fell for 8 straight days along with the market. It was Vedanta. The yield for the company's dollar bonds also depreciated. This on the fears that the company will not be able to make its debt obligations or pay its debt obligations after the government has blocked the sale of select assets to Hindustan Zinc. However, Vedanta has maintained that there is no question of default and they are in a comfortable position. Nigel joins in with more.
Well, the Vedanta Limited stock is under pressure as the street fears the default of the promoter Vedanta Resources End. Now, the long-term debt maturities for the next few years are a little more than $7 billion. In the first half of next fiscal, there are maturities amounting to around $900 million which are due. And since there is fear of default, the bond prices have been falling, which has an inverse relation with yields. And the promoter entity holds stake in both Vedanta as well as Hindustan Zinc, and rather large ones. The problem is that most of those shares are pledged. So the fear is that these pledged shares could possibly hit the market. Now, the trouble started mounting when Hindustan Zinc's plan to buy out Vedanta's international zinc assets hit a roadblock. This as the Government of India opposed the transaction. Keep in mind, the Government of India had roughly around 30% stake in Hindustan Zinc, and they also have board representation. Now, the proposed transaction was that Vedanta would sell its international zinc assets to Hindustan Zinc for nearly around $3 billion. That would mean the deal would be done at 10 times EV upon EBITDA, which is very, very expensive for a metal company. The other problem is it would drain Hindustan Zinc of all its cash in its books. The big question is Vedanta Resources able to wriggle out of this? The answer could probably be yes, because they could use their credit lines with banks to refinance the debt in the near term. They could also approach the Government of India, look at reworking this entire international zinc deal. The government, remember, had asked them to explore other cashless methods for the acquisition of the assets. And maybe possibly as well, Hindustan Zinc goes ahead and simply pays out a large dividend. That flows to Vedanta Resources via Vedanta Limited. Valuation-wise, well, the Vedanta stock is attractively priced at around 3.5 times EV on EBITDA. We reached out to the Vedanta spokesperson, and the reply was to CNBC-TV18's query that they are in a comfortable position to meet the near-term maturities, adding that there is no question of default, and except around 6.8% Hindustan Zinc shares, other holdings are not pledged, so there is no risk of any further selling of shares.
All right, let's see whether Vedanta wriggles out of this position right now or not, as it has in the past as well. But let's move on to the other one. Zee Entertainment, its re-entry into the F&O list actually helped the stock gain almost 6% today in an otherwise wobbly market. The street also cheered City Network's decision to move forward on debt resolution. That gives hopes that maybe, the merger will go through and the company will get out of the IBC-related process and the imbroglio that it is in with IndusInd Bank. We have Vivek joining in with more details on that. Vivek.
Well, absolutely, Zee Entertainment, a technical positive as far as this name is concerned. So on February 23, NCLT had admitted Zee Entertainment under the IBC, and on the same day, NSE had said that, May series onwards, Zee Entertainment would be excluded from the F&O trading segment. However, the NCLAT gave a relief as far as Zee is concerned, and yesterday, post-market hours, there was a notification to the exchanges where NSE withdrew that circular. Two important developments for Zee that needs to be tracked. In the earlier circular, May series onwards, there would be no fresh contracts, and the second one was requirement of 100% margin upfront payment that was required. So given the fact that both of these now stands withdrawn, it's a technical positive as far as Zee is concerned, and no wonder the stock is doing very well in today's trading session.
All right, Vivek, thanks a lot for that. We'll take a short break, come back and we'll talk about the other stories that we're tracking today. But as we take that short break, just hear out some commentary coming in on the labor market from Aditya Bhave of Bank of America.
The negative consequences, you're already seeing them, right? Mortgage rates increased actually very, very early in the hiking cycle. They peaked out well over 7%. We're back up over 7% now. So that's one point of concern, obviously, and you've seen the impact on the housing market. You would expect business investment to slow further as broadly demand slows down, and also because of higher rates. And at some point, you would think that the labor market also cracks.
Welcome back. You're watching us here on Markets Today. We've spoken about the important stories that we're tracking the market. We spoke about Vedanta, about Zee as well. But there were a bunch of other stories as well that made the news today. It was Cipla that slid about 4% after the US FDA's 8 observations on its Pithampur facility came by. The stock ended at the low point of the trade, and that's because markets fear that this is likely to delay the launch of its key respiratory drug, which is Advair generic. Ekta Batra joins in with the details of that. Ekta.
Well, yes, Cipla is in focus in today's trading session simply because we have managed to access the Form 483, which contains the 8 observations which were issued to the company's Indore facility, which was inspected from the 6th of Feb to the 17th of Feb. Now, why exactly is this important is because the nature of the observations can now be assessed. And while there are no data integrity observations according to the analysts, the observations still continue to be complex. So what that means is that this is probably going to take a longer time frame to resolve. There could be a likelihood of a re-inspection by the US drug regulators, and the analysts have not ruled out an escalation to an official action indicated status, which means that current approvals from this particular facility could be impacted. Now, why exactly is that important is because one of the key drugs is filed from this particular facility, which is Advair generic, an inhaler, which is expected to be launched by Q1 of FY24. If in case there is an adverse action by the regulator on this particular plant, then this particular drug in question, Advair generic, could then get delayed in terms of a launch for Cipla, and is estimated to be around 5% of their FY24 as well as FY25 EPS. Separately, this particular plant is any which way important for Cipla. It does manufacture oral solids as well as inhalers, and is around 20% of their FY23 estimated EBITDA. So the street will wait and watch what the next steps would be from the company in terms of replying to the US FDA remediation of the particular facility, as well as the US FDA's action going forward.
All right, Ekta, thanks a lot for that. Let's talk about the Adani Group. there was some respite today. The stocks of the group gained almost 30,000 crores in terms of market cap after nearly 3 weeks, making it one of the best days for the stock, the group rather, in 3 weeks. Adani Total, Adani Transmission were the only 2 of the 10 group stocks that ended the day in the red. Total was down 5%. Transmission was lower as well, but the others gained in today's trading session. But remember, since the Hindenburg report was released in January, the stocks have actually lost a market cap of a little over 12 lakh crores. So in light of that, this 30,000 crore bump up that we saw today is, it needs to be viewed in that perspective as well. As things stand, the market capitalization of the group is back above 7 lakh crore rupees. Vivek is back with us to give us some more details on what happened there. Vivek, some respite today.
Well, absolutely right. The Adani Group stocks, all of them have recovered sharply intraday. And actually what's happening is, the Adani Group management has organized investor roadshows, and this has been done in, both Hong Kong as well as Singapore. All throughout the week, they're meeting investors and they are assuaging all of the concerns, especially regarding leverage as well as the bond payments that are up for due. So now, what the company officials have said, and this is as per newspaper reports, company officials say that, the group isn't looking to refinance debt at this point of time or inject fresh capital into the business. In fact, what they've done is they've updated all of the investors in depth about the earnings profile as well as the debt profile. They've also gone ahead and highlighted the list of bond prepayments that they've done and the list of bond prepayments that they intend to do in the coming months. On the back of that, today if you're looking at the stocks, Adani Enterprises, first we'll have to look at the F&O names. Adani Enterprises has recovered almost 20% on an intraday basis, and it has managed to snap a 7-day losing streak. Adani Ports up 7%. There's been a clear outperformer up for the 4th straight session. And when you're talking about Abuja and ACC, both are up almost 5% on an intraday basis. On the other hand, when you're talking about the cash stocks, some of the pain persists here. Adani Transmission, after a brief intraday spike, once again down at the lower circuit. And when you're talking about this particular name, 14 straight lower circuits is what this name has seen. Adani Green today is in the green, but it's managed to snap a 6-day losing streak as well. Adani Total Gas, the pain is very clear out here. 23 straight lower circuits for this particular name. Adani Wilmar, NDTV, as well as Adani Power, all of them today have managed to recover.
All right, Vivek, thanks a lot for that. Indiabulls Real Estate too lost over 5% after some key leadership changes. Nimesh joins in with the latest on that. Nimesh, the leadership changes were viewed to be positive. Why is it that the stock saw some profit taking perhaps?
The stock is down 5%. I'm surprised, the market has taken this news negatively. But first for the news, the company has announced that there has been a change of management at the top end. So the current MD has resigned, which is Mehul Johnson, and he'll be replaced by Sachin Shah, who will be the ED for the next 5 years. Apart from that, additionally, they have also appointed 3 independent directors on the board for the period of 3 years. Now, to read this, it effectively means that there will be further control in the hands of Embassy. Remember, Embassy and Indiabulls Housing, Indiabulls Real Estate is looking to merge, and that NCLT order is pending. The next NCLT hearing for this merger is scheduled for tomorrow, which is March 1st. So that will be important to track. But in the fresh development, there's been a change of guard in terms of top management. The current MD resigns, and most of the new board is largely appointed by Embassy. So the control goes largely in favor of Embassy going forward, and the next trigger will be the NCLT approval for the merger.
All right, and let's stick with stocks that made news today. We have Vesuvius India as well, reported a weakest set of numbers, and as a result of which the stock was lower, a weak margin in their 4th quarter of calendar year 2022 results.
Well, that's right. If you look at it on a year-on-year basis, the numbers look good. The problem is there is a degrowth on the top line, both on a sequential basis, a bit of a degrowth that we've seen out there by close to around 5 crores odd. And on the EBITDA front, there's a big degrowth. So that's why the street is a little bit nervous out there. And the margins that were in mid-teens, 14% in the previous quarter, they've come down to around 11%. So on a year-on-year basis, it looks good. But still, in fact, on a sequential basis, it's lower, which is a little bit disappointing. The other news was that they appointed a new CFO who has an investment banking background, but that's failed to enthuse the street at least as of now. The valuation picture should come up for you. The stock trades at around 29-30 times its trailing earnings. So valuation concerns, point number 1. The second factor is you just pull up a 1-month chart. Even after this 11% cut, the stock is down only around 1%. That means in the run-up to this, to these results, the stock, in fact, was up close to around 10%. So it's some profit-taking, high valuations, and margin disappointment, the three factors that explain why the stock is under pressure.
All right, Nigel, thanks a lot for that. With that, we will talk about state-owned telecom infra provider RailTel. That was up close to about 3.5% in today's trading session. We spoke with the CMD of the company, Mr. Kumar, who said that they expect at least 1,500 crore rupees worth new orders in FY24 and were confident of getting 400 crores worth orders in the fourth quarter itself, a number that they reiterated. Let's hear him out.
Orders should not be less than 1,500 CR new orders coming in at least. That is, I would say, a very conservative number from my perspective, the way I see the market. And this Q4 number, I'm sure that I'll be closing it somewhere around 400. There is some difference due to the provisioning which we have done, which is around 39 CR this year. So this is actually is a momentary figure which comes into our statement, and then once we realize it, so most of it is kind of we will realize it. So it will make us better. But yes, there is pressure on margins, and there's competition heating up in the market also.
All right, with that, we'll wrap up on this edition of Markets Today. Thank you so much for watching. Stay tuned to CNBC TV 18.